trade. It sounds very clean and well structured in theory, but when it comes to practice, it's not that innocent at all. We've always been told this. Trade connects countries, lowers prices, spreads prosperity, and even reduces the chances of war. But is it really like that? The logic is simple. People exchange what they have for what they need. Everyone wins. And over time, the world becomes more harmonious. It's a nice story, isn't it? Quite elegant, logical, civilized. But there's a small problem. History doesn't really confirm it. Because trade has never truly been free, at least not in the way it's been described to us. It has always been shaped by power, sometimes protected by navies, sometimes financed by empires, and sometimes rewritten whenever the powerful didn't like the outcome. Yes, goods crossed oceans, settlements grew, prosperity was created. But behind this system there was always something else, a state, an army, a banking network, or a state-backed monopoly. So in short, free trade has often been an illusion. In reality, it mostly meant one thing: freedom for those who already had power. Trade has always been tied to politics. In practice, it has always followed power. But in theory, we were told the opposite for a long time. We were told, trade is now neutral, frictionless, easier than ever. Goods come from wherever they are cheapest. Everyone benefits. When factories shut down, it was called efficiency. When countries became dependent on others, it was called a natural process, as if the world had matured and left coercion behind. But if you look a bit more carefully, you start to see that this isn't really the case. Navies, economic sanctions, pressure, calling a system held together by these things free trade, feels a bit ironic, doesn't it? In the past, rulers saw trade much more clearly. Trade equals wealth. Wealth equals taxes. Taxes equals army, power, survival. So trade wasn't really a market. It was a competition. That's why in the 16th to 18th centuries, states saw the world like this. Whoever controls trade routes, ports, and raw materials becomes powerful. And honestly, that's exactly what happened. Spain moved massive amounts of precious metals from the Americas. Portugal fought to control the spice routes. The Dutch and the British built giant trading companies that were basically half-state entities. This system wasn't about freedom. It was about control. Then things get interesting. In the 19th century, Britain came forward and said, "Free trade is the best system." But it said this when it was already the strongest. It had built its industry, its navy was dominant, and it controlled markets. So after reaching the top, saying, "Let's be open to everything," worked in its favor. In other words, free trade didn't make Britain powerful. Britain supported free trade once it was already powerful. We can see the same story in the United States. At first, the U.S. didn't support free trade. On the contrary, it protected its own industries, imposed high tariffs, and tried to grow domestic production. But once it became strong, it turned into a supporter of free trade. So there's a very clear pattern. Rising countries talk about strategy. Powerful countries talk about principles. This doesn't mean trade is completely bad. No, trade really does create wealth, spread and develop technology, raise living standards. But here's the key point. Trade has never been neutral. The real questions are always, who sets the rules? Who controls the money? Who controls the shipping routes? Who becomes dependent? After World War II, a new system was built under U.S. leadership. The dollar became central, trade expanded, and the world grew richer. But even though it looked like a self-functioning system, it still rested on power. It wasn't just about markets. Behind it there was military power, financial systems, legal structures, political influence. Then China entered the stage. And it reminded everyone of something important. Trade is not a moral lesson, it's a power game. China didn't grow by strictly following free market ideology. The state supported, planned, and protected key sectors, and the result? It became the world's manufacturing center and made many countries dependent on it in different areas. Where we are today, 2026, things sound very different. Instead of a free trade, we hear sanctions, supply security, domestic production, strategic sectors, chip wars, because everyone has realized something: cheap goods are great. But if someone else produces critical goods, that's a risk. And this doesn't just affect states, it affects individuals too. Prices rise, supply chains break, inflation increases. So this is no longer just theory, it's something we all experience in real life. The conclusion is clear: trade has never been truly free, because it has never been truly independent. Trade is not bad, but it is not neutral either. Those who have power shape the system. The rest are told a story about efficiency. And always remember this: trade follows power first, theory second.